I managed to pull £30 from my account somehow. Anyways, I decided I'm going to buy a stock, not stock, well, 0.1% of, 0.1% of a share, basically, which is about £26. Um, it's a good buy, man. I wish I had a bit more money, but it is what it is. So I'm going to purchase it anyways. Yeah, so I purchased it. There you go. So I purchased it at about just over 4%. So yeah, I'm happy with it. Uh, Obviously, on hindsight, I should have waited from here to there, but then I haven't got proper graphs to work out certain figures, technical stuff. But anyways, I'm happy with it. So I spent £400 on my stock, basically, Microsoft stock in total. I'm cool with that. I'm really cool with that. Okie dokie, fine, awesome. So technical analysis, right? Now, I like to use Yahoo for that. So Yahoo, the things I look up for normally, things like better rating, that's important. That tells me it's very close, not very, but this is not far from the index market itself. Index market itself is 1%. Sorry, not 1%, it's just one. So this is 1.52, which is great. That's very close to the stock market. Market cap, that's 4.48 billion pound, basically, because this is in British currency, basically. Okay, so that's great. Then if you want to look at, for example, a dividend yield, this is how much dividend you'll make annually. Also, another thing to bear in mind, this price is not pound, this is in pence. British stock market is in pence, not pound. So that would be like £4.60 if you were to buy a stock today, a share, basically, yeah, in that company. So you'll pay £4.60. What else to look out for? There are a few other things to look out for. I'll show you where they are. PE ratio, price per earning ratio, 7.8, which is okayish. It's not bad, actually. When the PE ratio is too high, like 40, 30, 80, you should be worried about those stocks. And you also got to compare that to the market average. So if the market average is, say, 9, and this particular stock has P ratio that's below market average for that particular stock, like, say, real estate or properties, then that's a good purchase. That's strong, right? But if the market average for properties was, let's just say it was, market average is 9, and the stock PE ratio reading was, say, 30, I'd be worried, because I'm like, whoa, that's way above the average. Okay, it's not always something to be worried about, but it does tell it is a kind of a warning for what's to come ahead, and you'll have to study a bit more as to why it's up. There could be a good reason for it. Now, another thing I look at is here. So for example, Yahoo anticipates this particular stock to reach £5.10 at the end of the year, right? So at the moment it's below that, which means you'll get a gain. So that gives you a bit more information as to about this particular stock we're looking at, right? So expected annual figure, dividend, PE ratio, better rating, market cap. Volume is good. Volume is important if you're doing short trading, like swing and day trade and stuff like that. In our case, it's not going to matter as much. And obviously, graph, as I said, you need to study the graph. So this is today. I purchased prices here, down here, down there, but it's gone up. So I made some gain on it, basically, in a nutshell. Now, analysis. Sometimes I pay attention to here next year's earning potentials. Sometimes I don't. Depends what stock it is. So growth estimates for next year is not given here for this particular stock. Fine. Anyhow, let's go here. So here they'll tell you whether they predict that to be a strong buy or not. It's kind of just over a good buy. I'm buying it because of other reasons. Like I said, I'm buying it because I know the economy is down, and once the economy bounces back up, it will make me profit, especially the property sector. Okay, here is the average, and here where the price is now. So obviously it's a good buy. So I bought a fair bit of share into that particular company. Obviously I didn't put 1,000. I only put a couple of. I think it's about £200. And the reason why I put £200 in this instead of £1,000, I'm just spreading my risk between different companies. Like for example, this particular one, I've got money into that as well. I've put about £200 in this. Now, it's the same type. It's from the same sector, which is properties or real estate. But that's my focus on at the moment. Not just real estate, but today's focus was real estate purely because they were down, way down than they should be. Hence, that is why I invested. So again, market cap is just over 3 billion. PE ratio is quite good, as you can tell. As you can see, it's lower than the other one. Yeah, so hopefully that gives you an idea about analysis and how to use this particular Yahoo for analytical purposes.